Hey, what's going on, beautiful people? This is the Black and Financial Group. We haven't had a webinar for a good minute. Me and Starsky been very busy. As you can see, he has a little gray hair on his on his goatee. It happens. It happens. What's going on, man?
Oh man, it's been far too long. Like I know, and everyone in the group that's probably watching, like the world has opened kind of back up. We're in the new norm, and people have been busy trying to juggle family, work, businesses. I know a lot of people probably been traveling and taking advantage of the low cost of traveling, everything else, while the world is slowly opening back up. But things are still on what's the word to use? Don't know what's going to happen next. Like I'm still like, I don't know what 2022 to 2025 is going to look like for us, but maybe you do, Ahmad. So it's glad to catch up.
Yeah, I wish, I knew, because then obviously my stock picks would be a lot better than they are. But just to highlight some things that came up, in regards to good signs. So just today, this morning, the jobs report came out. It actually was positive, right? Unemployment went down, new job growth, sectors like the service industry saw growth, which we know once you got the Christmas, right? The holidays, retail stores and hotels and resorts start hiring more people. So we saw an uptick in that, which is good news. It shows that it's flowing in the right direction again, right?
Yes, but still, we can have that top conversation because I live right next door to a brand new hotel, and Amazon, they're just accepting resumes. They don't care if you just got out of jail. They need the staff, they need the employees. They just need more workers because it's hard to find uh, committed and dedicated people. So yeah, it's good to see that job employments are up, but at the same time, it's like how long would that last? Is it stable?
Yeah.
Depending on how they're recruiting and hiring people.
Yeah. And the feds, was that Wednesday? I think it was either Wednesday or Thursday. Basically they rolled out their plan. They are optimistic about our future. They said that they're gonna basically, there's a chance that they would increase interest rates, but further towards the end or middle of 2022, basically, right?
All right.
Which a lot of economists said that was going to happen, right? If we are moving in the right direction, that's what it's going to look like, right? To get the recovery happen, and that they're going to start tapering, like in upcoming months. And basically, what that means that the feds are not going to invest heavily in our economy like they've been doing, in regards to just throwing money, printing money, right? Stimulus money, all this stuff is helped to boost the economy. So when they said that we're going to start tapering, means we're gonna stop printing money, at least as much as we were, right? We're going to decrease the amount that we're investing in the type of business loans, grants, stimulus money, all these things, which is saying that they feel the economy is starting to stabilize, right?
Okay.
And because of those two, that level of information that is coming out, you're starting to see that the market is taking that very positive, right? Because
Nice.
you saw the NASDAQ basically jumped up, right? The S&P 500 jumped up. So these are all good signs going into the holidays.
Nice. And now, when we started this group, what, early 2020?
Yeah.
Now, if you were to got into the S&Ps back then, how up should you be by now? How up percentage-wise? How has the S&P done since 2020, January 2020?
They've been breaking records, right? So I haven't looked, but let's say you invested 20,000. Let's say you invested 10,000. I'm gonna do the math quick. So you invested $10,000 in VOO, right? You might have gotten doubled, right? So you might have gotten pretty close to $20,000, right? So that's pretty good.
That's making your money worth itself. So
exactly.
If you would have jumped in when we first started investing, you should be technically up, depending where you put your money in, or you down, depending where you put it in.
Yep, and a lot of we know that there were a lot of hype stocks, right? Meme stocks that were not generating profits. These companies were not generating any profit, but there was a lot of hype behind them, and the stocks went up because people were excited and investing. But then it crashed. We saw a lot of that too.
GameStop, all those memes.
Yep.
And my word of advice is, we're not financial advisors. We cannot give you choices of what to make in your financial investments, but do your homework. Listen, if you look at the business and the business model seems outdated, or they're not making any profits, and it's just like a Reddit community hyping it up, be careful. Be careful, because at that point you're gambling. You can always go to Vegas or New Jersey to gamble your money away. But when you're investing, thinking about generational wealth, do your homework. Don't just jump in because someone said, yo, this is the hot thing to jump in. Do your own homework.
Yeah, exactly. And here's some things to highlight when it comes to value investment. So value investment is actually looking at the long-term gain, long-term hold of a stock. You're looking at a 5-year growth revenue, basically looking at how the company has been growing in the last 5 years, right? We're looking at net income, right? So we're looking at the revenue of return. So you're looking at if the company is steadily growing, right? And within that growth, how much cash do they have on hand, right? That's something you can't manipulate. Companies can manipulate their numbers left and right, but they can't manipulate the amount of cash they have. And the reason why that's important, because cash is important if you have a major recession, right? So if your products are not being purchased anymore and all your orders stop, you need to be able to have a lot of cash on hand to basically drive you, to get you through the hard times, right?
And
also,
Cheesecake Factory, one example. People stop, going to Cheesecake Factory and getting a lot of food, but then banks, they had bailout money and cash in hand that they got through.
Yeah, because you still have the leases, right? You still have bills, you have all these things. Also, when it comes to cash, it's in investing in innovation, right? So think of Target, think of Walmart. When everything shut down, they had enough cash to go online, right? So they invested heavily in their online platforms that allow their sales to still grow while every other store was struggling. We saw Macy's struggle. We saw Lords and Taylor shut down because they didn't have cash, right? The other piece is a really big one, which I never thought about, but Warren Buffett looks at this, is stock buyback, right? Is companies will dilute their stocks by issuing more stocks. So the idea is that because they don't have cash, they create more stocks, they sell more stocks. So the stocks you have is worth less, right? And if that happens, then the company is worth less, right? So for example, if I have 100 shares of Tesla and they decided to issue, another million stocks or whatever, right? It's going to dilute because now I have 100 shares of a company that has millions and millions of stocks out there. It's worth less, right? And also, if they pay dividends, you're looking at the growth of those dividends. Have they been consistent? That means they have enough money. They've been growing as a company. Their revenue has been growing, so they're able to pay their dividends, and the dividends are growing, right? So those are the signs you look for as a value investment, and all that stuff is public. It's not like it's hiding somewhere, right? So if you're looking at the if you're looking at just earnings, every company provides an earning report. You go to the NASDAQ. Even if you have Robinhood, you can find all this information in there.
Right.
All right, so let's go down the line, man. I think we have a lot to talk about. We have a lot to talk about, but not a lot of time. So let's talk about the big elephant in the room, right? Supply chain, right? Because if we know that supply chain has been an issue, we heard about the chip shortage, right?
Shortage for those who have pools. There's been a lot of shortages.
Yeah, lumber, copper, all that stuff impacts your cell phones, your car, your new houses being built. All that stuff is all tied to supply chain. When supply chain gets stuck or slowed down, then companies can't get their hands on it, right? Or if they do, they have to pay more for it, which means that they're charging you as a customer more for that. And that also ties with what? Inflation, right? All right, so So let's talk about where supply chain is at, and and what people are saying, what to be aware of. Me and Starsky's been talking a lot about supply chain and how that's impacting some of our stocks, especially with many of the EV type of companies. Apple is also being hit because many of their phones and other products are heavily dependent on these chips and copper and other minerals, right? So let's talk about that. So what's your take on that right now?
Oh man, so living out in Los Angeles is one of those things where I have the beauty to see the coast and go hiking in the mountains. But while I'm looking out this coastline, I can see like 20 shippers, and they're not small. These are huge beasts of like ships that are carrying cargo just sitting out there. They're just sitting. They've been sitting there for months, and they're holding people's supplies, and they just can't get in. So it's just one of those things of what to do. They got stuff that's sitting there like chips that you mentioned for cars and everything else, but then they have like commodities such as honey, and it's scary just to watch some of those inflations happen. Like coffee doesn't cost $3 anymore.
Yeah.
It's because of the raw materials that it requires are just sitting out there in high demand.
So we know that's an issue. And it is affecting the cost of our products, right? But there's a lot of investors, analysts, and economists that are saying that we might see a turnaround, and they point out that during the supply chain issues, when companies realized there was a supply chain, they started ordering double or triple than they normally would, in anticipation that that there's going to be back orders, right? And now we are here a year later because all this stuff happened a year and a half ago, whatever, right? And also we had that issue in Egypt when there was a huge
Parallel parked the wrong way, huh?
yeah, exactly. And that caused this huge backlog, right, of all these shipping containers that got stuck there, right? So what they're saying is that now that we're here, a lot of companies, because they quadruple their orders, they now have a warehouse of inventory that is overloaded, right? So they have more inventory than they normally would, but now everything's starting to slow down in regards to houses, that are being made, right? Cars are not being bought like they used to, right? So you're starting to see all the prices starting to drop in cars and house, right? People are not fighting and bidding on houses anymore. I mean, my neighbor's house, it's been up for the last 2 months for sale, but I can tell you that every house around him that was up for sale was gone in weeks.
Now,
right?
is
So
the cost, is it now people are looking at it saying that it might be too much for the cost of it? Or they're just waiting, are they waiting for costs to drop?
I think a mixture of both, right? I think there was definitely a group of people that wanted to leave major cities, so they were just bidding on all these houses, right? But then you saw developers and investors see this uptick, so they just started jumping. I mean, we saw that with Zillow, right?
Yes. Conversation for another day, but
Yeah,
yes.
like I didn't know that Zillow was doing that. I didn't know
They
that's
got wind that they were doing that, and then now the conversation is how many homes do they really own? Now they're giving them like down to the penny of the dollar they're selling. So if a Zillow house that's out there, and you have the money in hand, grab it because they're going to sell it on a penny and a dollar. They're just trying to get rid of them.
Yeah, because they're getting rid of that business model, right? Which says that they don't see a profit in it anymore. And that was 40. So I was watching a video before we started talking. It was like 41% of their business. That's almost 50% of their business was tied to selling and acquiring homes. And they're saying we're going to stop it now, which says that people are not buying homes like they used to, or we're not getting the level of profit that we used to from selling homes.
Or I hate being a controversial person, but I know there's controversial people in our group. Or they might have a lawsuit coming down their hand, just trying to prep for that. But that's a conversation for another day. We'll bring it back up with hopefully somebody can speak more on it as well. But as you're saying, like the demand, and there's the now that we have the demand and we have a lot of products coming back in, should that, Ahmad, bring down inflation?
That's what people are saying, right? That well, there's two sides to this, right? We saw gas prices go up. We saw home, the cost of homes and certain food items go up, right? But the cost of my iPhone did not go up as much. Like, why is that? We knew that there's a chip shortage. We knew that there's a supply chain shortage, right? But when my wife got a new iPhone, the cost was like, it was like less than maybe $20, like different wise. It was not that big. Like it was not huge compared to buying a used car, buying a home, or even the cost of milk was a lot more in regards to what it was before COVID, right? So why is that? So some economists are saying that when it came to technology, everything was happening so quick, the technology sector couldn't adapt quick enough, right? They were also concerned where you and I we have to, if we want milk, pay double, right?
Mhm.
But it's not uncommon in our head to, if we paid $1.99 for a gallon of milk or $2.99, whatever it is, right? Depending if it's organic or not, right? And now it's $4. It's expensive, but I still need it. And it doesn't seem like big of a deal unless you like live off a tight budget, right?
Mhm.
But imagine a smartphone that costs $1,200, right? Normally $1,200, right? Average. But now you're paying $3,000 or $2,000. That's too much.
Yeah, I don't
Right?
need it.
So
I don't need it.
exactly. So I think the technology companies, they saw this, and many of them ended up they didn't adjust their prices based on the recession because they were afraid people would stop buying their phones. But now they may see a hit because their profit margin. So when you start seeing these earning calls, you saw that Apple didn't hit their earning calls, right? So they didn't make the amount of money they thought they would. Microsoft did the same thing. So there were several companies that saw a miss in regards to what they thought they were going to make, and they didn't. And I think a lot of it is tied to that. So some economists are saying that's also a sign of whether or not the recession, I mean not recession, the interest rate. What are we talking about again? Man, damn, inflation.
Yes.
that inflation is still a problem, right? That maybe we're going to start seeing an uptick in technology prices going up to catch up on what they didn't do in previous years, right? The other perspective is that, like we talked about the supply chain thing again, right? That a lot of these retail companies, like Walmart, like Target, car companies, right? The Chryslers, the Fords, they have their inventory has doubled or tripled, right? Because they had supply chain issues. So they end up ordering more than they normally would have. So they have like all this backlog of products, right? So people are not going to buy as much as they had bought in the previous year because one, we don't have stimulus money anymore, right? Now we're going to start living on a fixed budget.
Yep.
Winter's around the corner,
Yep.
right? So
And COVID's still here.
and COVID, yeah, exactly. So because of that, then the idea is that they have to get rid of this inventory, right? So they're going to start selling them at a lower price to get rid of them, right? So if everything, because they have to sell this stuff off, it means that these prices are going back maybe to normal prices, which even things out.
Let's see what happens. It's one of those things where I personally don't know, and I don't like to gamble, but I like to make investments and or purchase decisions based on knowledge and information. The world is changing faster than we thought. I literally was sitting on like we're doing right now. Zoom is the new norm. Not everyone is back in the office. Actually, there's a lot of companies that are saying we're not going back to the office, while others are saying, yeah, you come back to the office, but you must either wear a mask, take the test, or have the vaccine, which depending, what city, state you live in, may not be a problem or may be a problem. And it's interesting to see how we get back into what was the norm, and then what does the new future looks like when it comes to just working, whether you're blue collar or white collar, or you have your own business profession, like what does that look like globally moving forward?
Yeah, no, exactly. And I think that's what we have to, to keep an eye on, right? Because that may change, all of these predictions, right? Things may seem like it's going in the right direction, and then a curveball happens. Right? Someone throws a curveball because of of a certain type of industry changing their business structure, and that also causes ripple effect on other vendors that are supplying and working with that business. And I think even when it comes to interest rates, that could be good or bad for the market, right? So some companies would do very well if interest rates go up because they see that as an opportunity, right? And some businesses may go down because if interest rates go up, it means that maybe people are not taking loans like they would normally, that they would normally pursue, right? So less mortgages, less car loans, less student loans, and all these things, right? So it depends. So you have to be able to pivot, and understand, okay, if this happens, it doesn't mean that I get out of the stock market altogether. It means I just have to analyze what my portfolio look like and adjust it. When you and I were just talking about commodities, that during winter, especially during a recession, right, or what you perceive to be a recession, during inflation, high inflation, things like that, it's all the cost of gas, the cost of oil, the cost of energy normally goes up, right? So this is often when a lot of these larger investment firms, they pivot and they start right around now, they start investing in energy, they start investing in gas because you need this, right?
Yes.
And people are going to be paying more, right, to heat their homes. They're going to be paying more for the gas that they drive. Companies are going to be paying more for oil and so forth.
Mhm. Winter is coming, and it's not short winters either. We're probably going to have another conversation about how global warming is impacting commodities as well, such as everything from the coffee beans. But that's a conversation for another time. Um, Want to make sure that we keep this short and sweet and try to play catch up. And there's a lot to catch up on, so we're going to have to come back and give you guys more. What else do you want to talk about? Because there's been a lot of movement.
Yeah. So yes, so the big one is Tesla, obviously, right? And I've been going back and forth with people in regards to my decision to sell out. I sold all my Tesla stocks.
Wait, you sold? Who was the one? I thought you were the one to say, hold on to Tesla.
I know. The thing is that
I thought Ahmad was gonna come in here and say, listen, I just got $100,000. I'm rich. And just was giving us the wow.
Yeah, I had 30 shares of Tesla, so I bought it during the split, right? So it was never long term for me, just because it's a lot in one company. That was like a good percentage of my portfolio, and I always believe in balancing things, right? So the thing is, like, a lot of the analysts are saying it may go up to 2,000. Right. So people like, oh, you sold it at 1,100. That was my number. I doubled my money. So I'm good. Plus, if Tesla goes up, I'm still happy. Why? Because I'm investing in the S&P 500. Tesla is in there. So if Tesla goes up, my Vanguard goes up. Nice. Right? If Tesla goes up, QQQ goes up.
Yes.
Right? Yeah. So the NASDAQ, the Dow, all that stuff goes up, because Tesla is in all of those companies, because it's, like we said, it's more than just a EV company, right? So my thing is, it's fine. That was the plan, right? But here's the thing for Tesla owners to be aware of, right? So because the company has been making so much money and made so much money this year, Elon Musk owes the IRS like a ridiculous, it was like a few $1 billion, basically, right?
Yes.
So that idea that that companies don't pay taxes or not enough tax. They do pay taxes. I mean, not to the same degree that we would in regards to the money we make, but they do pay. So he owes a big chunk, right? So they're saying that in this situation, there's three things he could do, right? One is he can use his own money and pay that off, which he's not going to do. No billionaire is going to use their billions to pay the IRS, for what their company owes in taxes, right? Second, they take out a loan on behalf of the company, right? So now the company is bringing in more debt, right, to pay the IRS. So if that happens, that means their cash flow decreases. So the amount of cash they have at hand will decrease because the debt ratio has increased, which also may impact that their stocks would go down because of that, right? The other thing is he may issue more stocks, right?
You said if he issues more stocks, that means that lowers that's putting extra supply out there. So that it limits basically it decreases the value of your stock.
Exactly, which also causes their stocks to drop, right? So here's the play, right? So we know he's not going to use his own money. That's not going to happen, right?
Yeah. Yes.
Whether he takes a loan or he issues more shares, it means the stock will drop. I mean, historically, that's what's going to happen.
Yes.
Right. So if that happens, that's actually a buy opportunity because it's just going to go back up.
Going to go back up. Yes.
Right. So that's what you wait for. You wait until that announcement happens where he is saying that this is what they're going to do. And then you start seeing the stock drop. Right. It doesn't mean you sell. So if you are a diehard Tesla, supporter, don't sell your stocks. Right. This is the time that you start basically stacking up your money, all your cash.
Buy the dip.
Exactly. And you buy that dip when that happens. So it doesn't mean that the market is crashing, that Tesla has failed. That's how the market's going to react to how he pays the IRS, basically.
Yes. And we'll see. Who knows that, billionaires they're smart cookies. They learn how to hide their money, or their portfolios already in the stock portfolios. So, we'll see what happens.
Yep. So,
Biden is not, he wants the billionaires to pay their taxes. So we'll see.
Exactly. Yeah. So there's a lot of, buy opportunities. But the big thing to take, to just keep an eye on the market. Every analyst, every economist is saying that the market is extremely expensive. It's the most expensive than it's ever been. Right. Which means that every stock, at least the majority of stocks you see is overpriced. Right.
I thought we had a tapering back already. So you think we're going to have another tapering back?
I think there might be a correction, a market correction. Who knows? It could be, after Christmas. It could be after New Year's. It could be a year from now. You just don't know. Right. We don't know. But, historically, this is usually when the market corrects itself, when it's like everything is too expensive, everything is overpriced. Companies that are not making money, their stocks are worth doubled, so that so their revenue doesn't connect with how much their stocks are costing people, right? People may stop investing and pull their money out as Christmas comes close and they start worrying about the new year. When the Feds announce they're going to increase interest rates, that could also cause the market to correct itself. Who knows?
Or that Christmas gift that you're ordering, it won't make it. You might order it today, it might not make it under the Christmas tree this year. So there's a lot of unknowns. But then again, I'm looking and seeing the trends. We've been here before. It's not like we haven't been in these situations before. So I'm just looking at historically, how did we navigate and what were our learning lessons?
Exactly. And like I said, my thing from what I shared last time was I was like, I have small stocks that are short term, right? These are not my big ticket items. And then I have long terms. These are things that are like 40 to 50% of my portfolio, right? And like I said,
my portfolio is not as well as invested as yours, but it's evenly spread out from medical to tech to even cannabis industry, which I'm dabbling in, to even the crypto, which is not stock, but it's one of those things I'm like, it looks like for me, it's here to stay.
Yeah, I agree with you. I agree, especially when you have countries creating policies around it, companies accepting it, the banking industry, which frowned upon it, several banks are now creating process and businesses around cryptocurrency. So I agree with you. I think the important thing is really understand what you're investing in, because we know that there are a lot of fraud that's happening.
There's fraud across. There's memes on both sides, but
Yep.
one thing that I try to tell people within the tech world, well, not in the tech world, within the crypto world, it's not insured. So you got to make sure that whatever you're playing around with, you are willing to understand that it could be gone tomorrow.
Exactly. Exactly. Yep. I mean, look at what is the squid, the squid token, whatever.
I saw that and my head was like, and it's just like the Dogecoin. I was like, what does it do? If it's a playoff of a well movie, then don't invest in the squid token, invest in Netflix.
Yeah, exactly. Yep.
And then who made it? If you don't know who made it, there's flags. I know there's a theme, there's a trend going around where people are putting these flags in their posts right now, red flags. I'm like, there's red flags you should always look at. One, do you know what it's made for? If you can't describe the business model of it, you shouldn't invest in it right now. You should do your homework. Two, who developed it? If you can't find out the names of those people or who's the CEO, you should question it. Three, is it just a meme? Is everyone hyping it up and everything else, and you're jumping in? Maybe you're jumping in at too high.
Yeah.
And you should look at it. So again, it's homework, homework, and homework. And if you don't do those three things, that one thing, then you're subjecting yourself to just lose everything that you just thought you was gonna just make something out. You just gamble.
Yeah, exactly. All right, everyone, we're going to end our conversation, our webinar. Just a quick note, we had several people that tried to post things that were related to their own business, their own, channel and so forth. If you want to do that on your channel. So this is not, an advertisement platform. We are here to offer free services, free advice. So when we provide links to resources, we're not benefiting off of them, right? This is an opportunity to share best practices, answer questions, things like that. This is not an advertisement spam platform, right? All right. So stay tuned, stay connected, continue to participate, engage, and learn, and let's grow together. Everyone have a wonderful, successful November month. We hope to talk to you again, hopefully after Thanksgiving. I think after Black Friday, we probably will need to have another conversation and what's happening.
We'll know what the market is doing. We'll understand what the market projections are. So that'll be a good time.
Exactly. All right, everyone, have a good one. Peace.